there, I'm Charity Dibu, your favorite tax lady. Welcome to our channel where we break down everything about taxes in simple terms, whether you are a tax pro or just starting out. This is a place for you. Hit that subscribe button and so you don't miss out our easy to understand tax advice. Let's get started. Today we are going to look about self-assessment, and personally for me it's a topic I believe that it's very important for each and every taxpayer because we are requested to, when you go to open a bank account or in any other services that you are seeking, you'll be requested to provide your KRA pin. And if you don't have, then you'll go to the KRA offices and request for registration. But once you get that KRA pin, something triggers. If you have a KRA pin today, either you are old, either you're just a youth, but you went ahead and you opened or you registered for a KRA pin, self assessment is for you. And this topic is very important for you, those who just have the KRA pin, or those who have established businesses. No matter how small that business is or how big that business is, self assessment is for you. And in self assessment, we are going to tackle and to see questions that are prepared, which I believe are questions that we need to answer very keenly. They might sound to be very simple, but they are quite useful and they carry a lot of weight. Not They may not carry a lot of weight right now, but in future, because at some point you are going to look at what we call the tax audits, or the additional assessment, and that is why I'm saying that self-assessment is something that carries a weight, a very great weight right now. So what is self-assessment? That is a question that we need to ask ourselves, and to keep on asking ourselves day in, day out, because if you are an entrepreneur, you're looking forward into having a business, so meaning that by the time you open or you register that business of yours, you need to have known what is self-assessment and how does it apply to you. Then what are the types of self-assessment return? Because they are quite very many and we may not be able to exhaust all of them, but we are going to look at them one by one. Then am I required to file a self-assessment return? As I have said, you have gone to seek for for certain services. Maybe you have gone to open a bank account. You have been requested to provide your KRA pin, but you don't have. So you go to a cyber, or you go to the KRA offices near you. You register a KRA pin. Then this question is for you: are you required to file a self-assessment return? And certainly that is yes. Then what are the filing deadlines for self-assessment return? Because according to the acts that are there are deadlines that are set for these types of self-assessment returns, and we are going to look at those deadlines. And if the deadline is there, what happens if you miss the deadline? Because certainly something will happen when you happen to miss that deadline. Then how do I file the self-assessment return? You can either file the self assessment yourself, or you can seek professional advice from someone who has the knowledge and the background to file the self assessment return. And certainly, can I make changes to my self assessment return after it's submitted? And that is a big yes. Sometimes we find that we have made a mistake, we have done some omission, then we need to rectify the self-assessment return that we did. Then you can opt to do something we call an amended assessment. How can I pay the taxes owed? Because it has a certain formula. Either you pay through the bank or you pay through M-Pesa, but before you go to pay, you need to have a payment slip. And I'm going to show you how you can generate that payment slip so that you can be able to pay the taxes owed on time. Then how can I reduce my tax liability legally? Tax planning is very key, and it's very important. And for those entrepreneurs who have businesses who have been in existence for quite some time, or those who are starting up, they need to do tax planning. And tax planning is legal because you are using the available laws that are set in the acts that we have for you to reduce your tax liability. And we are going to look at that. Then, do I need to keep records, and for how long? Certainly, that's a yes. You need to keep records of everything that you purchase, everything that you sell, all the payments that you are making. You need to keep those records. And for how long? You need to keep the records for a period of 5 years, meaning that if we are in 2023, we need to keep that document that we received in 2023 up to 2028. And sometimes the tax authority may seek for documents that are beyond the statutory the limit that has been given. They may go beyond the 5 years, either because you have engaged into some fraud or there are some crimes that are committed. Then they will go beyond the 5 years. Then what should I do if I receive a tax inquiry or audit notice? Because you just don't keep silent. And I know most of you, the taxpayers, those that are in business, you have received so many tax inquiries and audit notices, and sometimes you fail to respond. And failing to respond is not the right way, and it costs you a lot of money. When you term it in money form, it will cost you a lot. So, where can I find help or professional advice for self assessment? Because that is very important. Filing the self assessment return, you just don't go to the cyber, to someone who has just gone, did some training on how to file the returns, but they don't have the accounting or the auditing knowledge or even the tax knowledge, because that is something that is very important. And we say that the documents you need to keep them for a period of 5 years, and meaning that if you go today you to a cyber, they file for you a return, and they file that return wrongly during that period, within that period of 5 years, then KRA might come and review that return that was done. And if you don't have an explanation on the return that was filed, then it will cost you a lot. Then, so let us define what is self-assessment. And myself, I term self-assessment. It is a regime, and the self-assessment is whereby an individual, either an individual, a personal individual, or a company, that is a corporate business, is responsible for ensuring that their tax liability is calculated and any tax owing is paid on time. Because we said deadlines are there. And self assessment is you saying that I have made this particular amount of sales, I've incurred this particular amount of expenses, or incurred this a particular amount of purchases, and this is what I term as my tax liability, and I ensure that I pay it on time. And basically, it is an opportunity that we have been given by the Kenyan government, us as individuals who are taxpayers, to declare to the best of our ability concise assessment of the tax liability. Because KRA is not looking at the sales that you are declaring or the purchases that you are declaring. It is you who knows that my account for this particular month, I've made this amount of sales, I've made this amount of purchases, and I need to make this amount of tax. But so many of us are being advised wrongly. You are making sales, you are making purchases, but you are declaring nil. You have been told you are making sales, but you have made sales of 1 million, but you declare sales of 500,000. You have under declared. And then so that will lead to other things that will cost you a lot in terms of the penalties and in terms of the interest. And the self assessment, it was implemented in 1992, and it applies up to date. But that will not change because Kenya is a developing country. Ah, and under the proposed next generation, the tax and the revenue administration system, that is the Kenyan tax and revenue administration system, KRA will pre-populate taxpayers' return for taxpayers' verification. So you'll not have this opportunity to say that these sales, I've made these sales, I've made these purchases. those purchases with order, because like now we have the Teams machines that were introduced for the VAT, and those Teams machines, they are transmitting data to KRA on a real time basis. So meaning that when the integration has been done fully, will only download a pre-populated taxpayer's return and will only be required to verify that the sales that are there is the sales that I've made, the purchases that are there is the purchases that I've made. And that's why we need uh, to be at par with the information. We need to know, you as a taxpayer, you are an entrepreneur. You just say like, I don't have the accounting knowledge. I don't have the tax knowledge, but you can get some knowledge, the basic knowledge that you need to know, so that even when you engage a professional to look at your matter, or you engage an accountant to do the filing for you, you know, like, you have some basic knowledge on what they are doing. Then on the self assessment, we say that you are going to look at the types. We have the pay as you earn. And the pay as you earn is the taxes for the employees who are in employment, meaning that it's pay as you continue to earn. Then we have the value added tax. It's the tax on goods and services. And we have something we call the VAT Act. And the VAT Act highlights very well what is VAT, the zero rated supplies or the zero rated goods that are there. It also highlights the exempt. So everything is there. So you'll know whether something is vatable, whether something is zero rated, whether something is exempt. Then we have the corporate tax. And the corporate tax, it can be for the company or it can be an individual. I, as an individual, have my employment income. At the end of the year, yes, on a monthly basis, my employer has been deducting me some pay, and they are remitting to KRA. After 12 months, after the year has ended, I still need to file my returns because the employer has done their part. So some employees say that I've already filed my return. My employer is the one who files more me. But the matter in the ground is that the employer will file for you pay as you earn. But at the end of the year, you also need to file your return. And the reason for that is that because there are some who not only have the employment income, they have some other business income. So meaning that at the end of the year, you need to get a document we call a P9. And we are going to look at an example. So we are remaining with like 2 months for 2023 to end. So after December 2023, come January 2024, we need to be getting ready in filing our returns. Also, the companies need to be getting ready in filing their returns and filing their self assessing themselves, but they ensure that that information they are providing to KRA is the correct information. There is no discrepancy when you come to the actual information. Then we have the monthly rental income. So you have some a building somewhere, you are receiving rent, then it means that you need to be paying 10% of the amount that you are receiving. If you are receiving 200,000 per month from your tenants, you need to pay 10%. But with the Finance Act 2023, they reduced the rate to 7.5, but that will be effective come January 2024. Then we have the capital gain tax. You sell an asset, you sell a land, and that land you had bought it at 1 million. You are selling it at 2 million. During that particular period, you have incurred some legal expenses, you have incurred some valuation expenses, but the total cost now, when we add the original cost of the land and the additional cost that you have, the adjusted cost that you have incurred, it's coming to 1.5. Then it means that you have made a profit of 500,000, and that profit need to be subjected to capital gain tax at a rate of 15%. And we are going to look at that and how you need to file the capital gain tax. Then we have the advance tax. The advance tax is the tax on commercial vehicles. you need to pay tax on that. We have the installment tax. If the tax you need to pay for a particular year is more than 40,000, then you may need to pay that the tax. You calculate your taxes for this for last year and you had 100,000, then you need to divide that tax into several portions and pay it in installments. And we are going to look at the deadlines for that and how that installment tax is calculated. Then we have excise duty. We have some other agency revenues, some taxes that have been introduced recently. We have the housing levy, we have the NITA, we have the stamp duty, we have turnover tax. Turnover tax, which before the Finance Act for 2023 was introduced, it was 1% per month on the gross sales that you have made. But that has changed effective July 2020. We are going to look at how do you have or how does the turnover tax apply? What are the requirements? Then we also have the withholding tax. The Finance Act had several changes, and one of them was that withholding tax should be paid within 5 days. So if you make payments to your supplier today and you are a withholding agent for VAT, within 5 days you need to have remitted that money to KRA. If you make some professional payments or some professional fees to someone who had provided professional services to you, you need to withhold 5% and remit that money within 5 days.